Get ready for AdvisorFi's 2-minute tip, starting in 3, 2, 1.
We interrupt our program to bring you this important message.
Good morning, Carl. You know, the mortgage interest deduction has always been the sacred cow, politically untouchable because it's so popular and was designed as a housing stimulus. Now, though, it is on the fiscal cliff table, and realtors and builders alike claim that even modifying it slightly will have huge consequences for home sales and prices. But will it? Will it? Will it?
Although worries of a housing crash persist, a housing-hungry millennial middle class and powerful economic performance are factors that outweigh housing crash indicators. So it's not as bad as one would think. About the mortgage interest deduction, its effect on the economy hasn't been terrible, but what I want to try to do, that's right, in this video, is give you all the information you need in order for you to decide how it's going to impact you personally. So in this video, what we're going to discuss are the tax reform changes on mortgage interest deductions when it comes to the itemized deductions and its limitations against the amount of debt that you're taking on. I'm going to put a ton of references in the description below, and so I'll make sure all that information is down below, but we only have 2 minutes, so let's dive right in. Okay, so what are the basics about mortgage interest deduction when it comes to the tax reform? Well, the new Trump tax reform, or the Tax Cut and Jobs Act, made 2 important changes to the mortgage interest deduction. The first is the limitation of the amount of mortgage debt. That is, there's a certain amount of money that you can get yourself in debt, and if you go past that amount, the mortgage interest paid on that debt is no longer tax deductible. And the second is a limitation on the home equity line of credit, or what they call the HELOC, which are generally sometimes pulled when your home increases in value and you're trying to do additional things with that equity. Now, what's the update? Well, there are 2, like I said. The first is general mortgage debt, the amount of debt you're getting yourself into when it comes to getting a mortgage. What this means is if you go past this threshold in mortgage debt, the interest paid on that mortgage debt is no longer tax deductible on your personal tax return. So in essence, the tax reform is really punishing those who are capable of having mortgages in excess of $750,000 if married, or $375,000 if single. And number 2, the HELOC debt, or the home equity line of credit debt, appear to have been completely eliminated in the tax reform. The HELOCs generally happen when your home increases in value or increases in equity, and you pull that excess equity out for whatever personal reasons. Now, there are some warnings about mortgage debt that you should know. I want to make sure that you're aware of them. Be careful of any mortgage modification that includes cash outs, even if it's just for closing costs. The reason why is it may result in the loss of, let's say, a grandfathered $1 million threshold debt limit, and it may cause it to become $750,000. So if you bought a house and you're underneath the grandfathered $1 million rule, which is for married taxpayers, and you modify the mortgage somehow, you may get your new modified mortgage into the new rule of $750,000 and may limit you on that front. No home equity interest deduction can be claimed unless you as a taxpayer can prove through documents the expenses to either buying, building, or improving the main home. Okay, that's it. Hopefully that answered all your questions about the tax reform affecting mortgage interest deduction. If you are a homeowner, click down in the description below. I'm going to add more information, especially from the American Bankers Association, the ABA. They have some great content that you can get, really nice summarized, readable content on this particular topic. Also, if you're working with a tax professional, go to your tax professional. I'm sure he or she is up to date on the tax code. And if not, click down in the description below. There'll be more information there for you. Thanks again for watching. Don't forget to subscribe, and we'll see you at the next video.
Thank you for watching. Be sure to follow us for more business and tax reform information. Hit the button below to follow. Hit the video over there for more. If not, I am going to touch your book. Thank you, America, and see you at the next video.